Dear viewers, this is our weekly program, Expert Speaks. This week I have brought an expert to talk on the real estate. The global markets are on a turmoil. The bond markets, the currency markets, the equity market, war between Russia and Ukraine all have created a turmoil in the financial market. In this week, we are going to examine how this is going to impact the real estate investments in India. This is NRI Money Clinic for you, and I am Dr. Chandrakant Bhatt, your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, to talk about the effects of global turmoil on the Indian real estate sector, I have brought to the studio my eminent faculty, Chartered Accountant, Mr. D.B. Mehta. Mr. D.B. Mehta, by education, is a Chartered Accountant, an ex-IRS officer, a man with enormous interest in different businesses. He is a chairman of Allegro Group of Builders, which has interests in real estate in Mangalore and Bangalore. He is also chairman of Yuga Group, which has business interests in automobile distribution. His other interests include investments in wind energy and financial markets. He is also the vice president of Credai Builders Association of State of Karnataka. He was the past president of Mangalore Stock Exchange, and if I keep reading about him, it gets into a long introduction. Welcome to the show, Mr. D.B. Mehta.
Thank you so much.
Mr. Mehta, global markets are in turmoil. You are in the midst of all this. You know the inside story of why there is a turmoil and how it affects different businesses. You are a man with interest in financial markets, real estate, and so many of these things. Please tell, for the benefit of our audience, is there a correlation between what happens outside of India to the real estate sector in investments in India?
See, the correlation is definitely there, but it's a positive correlation when it comes to real estate investment, rather than a negative correlation when it comes to investment in equity shares. I'll explain to you in just in brief. When the turmoil happens, the dollar strengthens, the rupee depreciates. The minute rupee depreciates, it becomes lucrative for Indian NRIs to invest in real estate. Now, rupee has depreciated by 12% in the last 8 months. Real estate has become 12% cheaper automatically. So, there's an inverse relation in that way.
Okay. So, it's a good opportunity that way for somebody who has an interest to invest in real estate. When the INR is depreciating, it creates a positive atmosphere for him that the asset has become cheaper.
Definitely.
Right?
Definitely.
So, this is what has happened.
And this time around, there's a double bonanza. Real estate, it's at a very low level, because of so many reasons, including COVID, and there is a rupee depreciation. So, you are entering in a market at its bottom.
So, it will have a multiplier effect. I still remember somewhere in 2012, 2013, a similar rupee depreciation happened, which brought rupee from all the way from 45 to 68. But one thing what I noticed at that point of time was real estate was in its peak.
That became a trap for the NRI investors.
And for the trap for the NRI investors. So, they were already attached to real estate stories and those people invested there. But today what is happening is something which is unbelievable, which means rupee has depreciated, making the cost of this investment much cheaper in dollar terms. Plus the sector real estate itself is in a bottom state, which means any upside from here you get benefited both
today
by way
in dollar terms. You are buying exactly at the price of 2012 and 13. So, you imagine you are saving 9 years of IRR and you are able to invest at the same price today. So, that's the advantage.
So, and only when you see this in a real rational way you will find an answer for this. Mr. Mehta, you told me about this being a better time to put money into the real estate for the obvious reasons of the assets have become cheaper, the real estate is a cyclical business and the cycle is down now. Now, because the INR has depreciated, does it do any specific thing in real estate? I will be little bit more specific here. Will there be more launches, more activity, more customer interest in this? Have you seen anything like that happening or
Yeah,
expecting something like that?
I'll just correct the phrase. Real estate is right now bottoming out rather than being down.
Okay.
So, I don't see any further downward movement, it is bottoming out. That is point 1. Point 2, if you look at the smart investors, the private equity investors in real estate from abroad, $2.8 billion has already been pumped into the real estate sector in India in the first 6 months. Now, that is higher than pre-COVID level in the first 6 months.
Okay.
So, that shows what interest the high net worth investors have in Indian real estate sector. The other aspect to look at is the inventory level of the real estate. In the last 6 months, the inventory levels from 7,25,000 unsold apartments has gone up to 7,85,000 unsold apartments, which means a lot of flats are under construction, looking forward to a demand which will be coming up and is already in the process of having higher demands. If you look at the price correlation in India, in the last 6 months, in most of the cities, prices have moved up between 5% to 10%. And this is definitely giving a signal that we are on a first step of an upward move of the real estate sector in India.
So, you mean to say the unsold inventories have gone up, which means the projects which are in the pipeline could have got completed.
No, when I say unsold inventory, it means the projects which are launched, not a completed unsold inventory.
Okay.
This is a unsold inventory of projects which are under construction.
Under construction.
Yeah.
So, the initial price tick has happened, which means to say it has bottomed out and it is maybe making an attempt to move on the upside.
Yes.
There is inflation on the ground, which is a positive for hard assets like the real estate. It's also a function of better economic activity that's happening in the Indian economy, which is creating more demand. And to support that, now the INR depreciation is making it more attractive for the NRIs to invest in the real estate.
See, there's slight confusion in the mind of economic experts. In the developed economy, real estate sector is directly linked with economic growth and low interest.
Okay.
Whereas in developing economies, real estate is a hedge to the inflation. Higher the inflation, higher the appreciation in the real estate. And if you look at the past 30 years in India, whenever the inflation has started moving up, real estate has gone up even higher.
Now, in the last 1 year, now we are looking at the inflation. Is there an uptick on rentals which is happening in the economy, or the people who want to rent it out? Is there an uptick on the rental yields?
Yeah, definitely. So, like I can talk about Bangalore because we are building in Bangalore also. Commercial rental yield in Bangalore in this just last 1 year has gone up by 20%. Now, which is a very fast uptick in the rental yield in Bangalore. Residential has moved up by 10%. And I personally feel that this uptick will continue for the next 3-4 years.
See, because when the rental yields move up, that could be the first indicator of either shortage or the better economic activity, or it could be the first indication that the underlying property will also go through a appreciation cycle beyond that point.
The absorption rate for both commercial and residential post COVID has been phenomenal of completed inventory. And today, in most of the cities except barring Delhi NCR region, the completed inventory has fallen drastically in this last 12 months. What is moving up is the inventory which is under construction, and that's a positive sign. That shows that developers are confident of the market going ahead.
Plus, there is a time interval from the time you launch a project and they get delivered into the market. So, probably there is a lag of some 3 to 4 years from the time the project gets launched and the more supplies come into the market.
Yes, India still follows the conventional method of construction where projects take anywhere between 3 years to 5 years to complete. So, when we say inventory is going up under construction, this inventory will become finished stock 3 years to 5 years down the line. And most of it will get absorbed in the market before it's completed. So, there will be a shortage for the next 3 to 5 years of availability of completed inventory.
So, if anybody has an interest to venture into buying a real estate, be it commercial or be it residential, probably they should look at the current time to lock into the low price of real estate which is ruling at the moment.
Yeah, this is the best opportunity available. Maybe a year down the line, real estate may give another 8 to 10% returns, and as we keep moving forward, it will keep moving faster and faster, and investors should not get the feeling of missing the bus.
Yeah, I remember the episode what we done a few months before, which that episode went viral and people appreciated it a lot, where you spoke about the real estate cycle, equity cycle, the correlation between them and how it gets played out. And I can see between the months that we did the video and what's happening on the ground exactly reflects what's happening on the ground. Probably I should give a link of that video
Yes.
for the benefit of our viewers in the description box below as well as in the card section here on the top. So, people can watch your views, what you have said months before what's happening right now.
Because it's a very simple correlation. Equity market starts, it peaks out when the interest rate is at the highest and it starts selling off, whereas the real estate starts moving up when the interest rate is at the peak, and it bottoms out when the interest rate is at its bottom. So, say like 3 years back, the interest rate was, housing loan was available at 6.5% and there was no interest in the real estate. So, in a developing economy, it's always inversely related to the interest and inflation cycle.
Okay. Mr. Mehta, you told about the attractiveness of real estate in India at the current juncture of real estate cycle, bottoming out the INR depreciation. Whatever we speak to anyone, the buzzword that is making rounds right now is global recession. Everybody is worried about it, whether it happens really, how long it's there or not. But people are worried as if that some major thing is going to happen. How does that affect the sentiments, or what do you see on the ground with that?
See, India, as we know, it's more a domestic economy. Our exports hardly cross $450 billion. So, that's not a very big chunk of our GDP. And I don't foresee any such jolt to the Indian economy in the next 3 years. We will continue growing above 6%, and we are in a win-win situation at the moment. The global recession this time is primarily because of supply constraint, huge increase in commodity prices and excessive printing of money. In our country, we have not printed money. Even during COVID time, I had made it very clear to many of my different debates that India did a very smart thing by addressing the supply side, whereas the developed world did a very fast kind of a thing where they wanted to get cheap popularity by addressing the demand side. Now, they are paying the price. You can just see the inflation. We are close to 7%, USA is above 9, Europe and UK is above 10. And the Western world, they are used to maximum 2% inflation.
Yes.
Whereas for us, we have seen even inflation in our 20s.
First time probably in the history, or at least I know of, where a country like India is having lesser inflation than the developed world itself.
That's perfectly well said. The management done by the current government and the RBI, and the focus has been only on inflation. And we are seeing the fruits of that. The fiscal policy, you even look at the taxation collection, even this year, GST is up by 18%. Income tax is up by almost 20% or 22% in the current year also. Now, if GST and inflation can go up so much, whereas inflation is only 7%. So, you can't say that the entire jump in the taxation and the revenues of the government is linked to inflation. There is still 12% more than the inflation.
Right.
So, that shows that our economy is very robust at this point in time.
And even you would have seen, for the first time, Indian markets are outperforming any other global markets today. US market, Nasdaq is down literally by 30 odd percent.
Nasdaq is down more than 30%.
30%. Dow Jones, S&P are more than 20%.
More than 20%.
But look at the Indian market, it's not even has dropped
8%.
Around 8% as
That's
of now.
it, yeah.
Even it went down from 62, it dropped to 52 and bounced back quite well. And it was supported by the domestic cash flows as well as the uptick on the economy in India within. So, this is happening for the first time. So, obviously, this will also have an effect on the real estate as well.
Definitely.
Mr. Mehta, you are having active interest in real estate. I know how popular your group Allegro builders in this part of the world, Mangalore and places where you have done the projects. Your approach to real estate has been well accepted and it has won the hearts and minds of investors in the real estate sector. You have done so many projects till now. You have running projects as well. What do you see on the ground? You have been in this line for such a long period of time. What kind of an activity you observe right now in your own projects?
So I'll just give an example of some ongoing projects. You know, our project called Woodsville in Bangalore. We are 80% booked in a period of 12 months. Project will be delivered maybe another 8 months down the line.
Okay.
We have started a new project in Bangalore in a place called Yelahanka. Just 3 months back, we are already booked by 20%. We have started a project in Mangalore called Allegro Aventus. Just 3 months back, we are already booked 20%.
Okay.
So, and in this 3-4 months time also, we have seen a slight price uptick from the day we started our launch till today. So, we are seeing both price upward movement as well as heavy demand at the booking stage. But there was a feeling a year back where, you know, a lot of actual home buyers were little hesitant in booking an apartment. But today I see that now those home buyers have come back into the market to book the flats right on the launch date.
Okay.
So, that is a very positive sign.
Okay.
That confidence is there in the buyers that they will be able to pay EMI and they have no further risk of, you know, job loss or pay cuts which happened during COVID.
Okay.
So, that is a very positive sign that the confidence level has come back with all the home buyers.
Which means to say the real estate is moving from a buyer's market and moving towards a seller's market.
Slowly it is moving towards the seller's market.
Very good.
Allegro Builders and Developers has an impressive portfolio of residential and commercial projects with over 2 decades of prominence in the construction industry. Bookings are ongoing for classic wind chimes apartments in the happening location of Yelahanka, Bangalore. Contact. Bookings are open and construction commenced for Allegro Aventus apartments in the prime location of Alake, Mangalore, where a host of comforts meet unparalleled convenience and beautiful scenic views at affordable costs. Contact.
Dear viewers, many of you have sent in the comment section or through a message asking me to give the contact details of Mr. DB Mehta. I have replied to you, or my team has replied to you, telling that he is not a practicing chartered accountant, he is a chartered accountant by education and he is not doing any practice in that particular line. But if you want to participate in any of his projects or if you want to buy real estate from him, I will be giving a link here in the description box below. You can fill in your details and you can tell him what projects you are interested in, and then probably we will pass on this data to them and they will contact you and you can see if it is of interest to you. We wish you make best use of the projects done by Mr. DB Mehta and the completed projects and the appreciation that they have got for the quality and timely deliverance is something which you can make best use of. Mr. Mehta, like every other field, real estate is also an evolving field. New things keep coming, things keep evolving. What's new in Indian real estate?
So, let us break into the commercial and residential separately. Now, for commercial, definitely I am saying that rental part is becoming interesting, where you can have 2 tenants at 2 different time zones for the same premises, plug and play.
Okay.
So, a particular company occupies the office from 9 in the morning till maybe 7 or 8 in the evening. B company moves in at 9 at night and occupies till 7 in the morning.
Who maintains the property?
The developer maintains the property.
Okay.
Yeah, and the developer at the end for the same premises and infrastructure gets much higher rent. At the same time, the user rent comes down. because there are two people paying rent for the same premise.
Productivity increases.
Productivity increases. So the cost for each user comes down.
Okay.
So that's a very interesting aspect. We have seen this happening in vehicles.
Okay.
Like a driver drives a vehicle in the daytime, he rents out his vehicle to another driver in the night time.
Okay.
So that concept has been borrowed and brought into the real estate.
Okay.
And today you can work from anywhere. So why not the same office be used by two different companies?
Yes.
On the time zone. So that's a very interesting new concept that's come. When you look at the residential, the co-ownership is catching up very rapidly with the youngsters.
Okay.
Where two unknown young people, or maybe more than two also, buy a single apartment.
Okay.
And they share the apartment in terms of the bedrooms and the common living room.
Okay.
So that concept has come up, and again here the maintenance is done by the developer. Providing services, utilities, change of certain clothings, bed sheets, towels, fresh towels, all these things, like it's a residential come hotel kind of a service.
So it's like a hotel you are owning. Somebody else is maintaining.
Yeah, somebody else is
you own a
maintaining.
portion of it.
Yeah, you own a portion of it. So that's a very interesting concept. The third thing which I have seen is the old age home has gone from selling the real estate to providing services.
Oh, okay.
You don't sell the real estate. The real estate is owned by the developer.
Okay.
He provides services by offering you a particular space, single occupation, double occupation, or more occupation, and he provides all the services.
Okay.
You are only charged for the services. You don't have to buy real estate.
Okay.
Now that's brought in a lot of comfort level to the young people who found it difficult to buy a real estate, separate real estate for old parents, especially when they are working abroad and they are concerned about the health, safety and other issues. So for them now this has become like a monthly payment,
Yes.
which they can easily afford.
Right.
And if they pass away, they are not saddled with one extra real estate to be sold off. So
Perfect.
that's a very beautiful concept that's come up.
Okay.
So a lot of new things are happening in the real estate sector.
Good. Probably we have to do one exclusive video on this.
Sure.
I'll give you time. I'll give you the framework what we are going to discuss. Probably we'll do one exclusive video on the new trends in the real estate.
Yeah, we should.
I think we are running out of the time. A final word on message for NRIs. If they want to do anything in the real estate, what message you have for the NRI community spread across the globe now?
See, first of all, this is the right time to invest in the Indian real estate market. So start concentrating on the Indian market. Point two, if you have resources there abroad, don't use your entire resources to buy the real estate. Take a loan in India.
You mean to say don't bring your cash and buy real estate
Yeah,
here?
because time tested, rupee will keep depreciating on an average by 4% annually. And you will be gaining with your own currency if you retain it there, and the rate of interest on an average will not cross 8% in India.
Okay.
And the money which you are retaining abroad, you are getting the benefit of the currency appreciation for the NRI. At the same time, you can fruitfully invest that currency in some other asset class.
Yes.
And you can earn much better.
Right.
So I have tried and tested, some of my investors have done it, and we have noticed that over a period of 7-8 years, the asset you buy in India becomes free.
Absolutely, absolutely. I had done exclusive video on this particular subject, telling people buying a real estate with your own money is not something which is so desirable. You can make a dead asset into a working asset by properly investing it. I will tell my own personal experience. See, way back in 2011, I took a housing loan, and the rupee to dirham equation at that time was 12 rupees per dirham. So my EMI was 60,000 rupees. And I had to shell down 5,000 dirhams every month to service this EMI. But that housing loan still continues. But dirham to rupee equation has gone to more than 20, 22.
Yeah,
so that means I am spending less than 3,000 dirhams in dirham terms to pay for this house. So if you take a loan in India and service it from periodical remittances that is can come, so you get the upside of real estate story. At the same time, you can make best use of
your own
the currency depreciation.
Yeah.
So don't do the mistake of taking a loan from abroad and remitting and thinking that you will be safe. No, it makes sense for you to make best use of the trends in currency market or in the cyclicity of the real estate. That's where the money has to be
It's
made.
a smart move.
It's a smart move.
Even within India, so like I have personally done the same thing. I had bought a house in Bangalore. I took 2 crores 25 lakhs loan from the bank, and an equal amount I invested in the equity market. Today my money has doubled in less than 4 years.
Right.
And house is virtually free.
But people think in an emotional way and they'll lose out on this. That it's time to keep emotions on the side, rather think in a rational way, take help of the professional, listen to different ideas coming from different places and choose the thing which is most beneficial.
And anyone, if he feels that he is not equipped to handle all this, definitely they can contact the expert, and you are one of the experts there.
Mr. Mehta, thank you very much for this discussion.
Thank you for having me.
I couldn't ask anything more than this. I couldn't find somebody who can talk as authoritatively as you when it comes to question of real estate, currencies, financial market. You have become a faculty of everything for me. Whenever I ask you to be present on this, a big thank you to you on behalf of my audience and on behalf of NRI Money Clinic.
Yeah.
I'll be keep sending you the request time to time.
Please
Take your time
Definitely.
and help our audience
Definitely.
in making their investments something which work for them. Thank you very much.
Thank you so much.
Dear viewers, hope the video that I have done today helped you to understand what's happening in the Indian real estate, what is the effect the global turmoil may have on Indian real estate, as well as how you can make best use of these times to make best return by investing in Indian real estate. If it did help you to understand the finer points of this topic, please like this video. If you are a person who is watching my channel for the first time, or if you are yet to subscribe for this channel, please hit the subscribe button and press the bell icon. Don't forget to share this video with your near and dear ones. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with yet another topic, with yet another expert very, very soon.
Press the bell icon for more details and subscribe our channel.